Hello there, this is FairBinaryOptions.com, looking to buy put options for the US dollar Canadian dollar. You might say, okay, so if the US dollar Canadian dollar is inverse correlated with Australian dollar US dollar, then buying puts for US dollar Canadian dollar implies buying calls for Aussie. Well, yes and no. The reason is that they are not traveling alone. There is also the cross between them, Australian dollar Canadian dollar, and that one is the decisive factor in this relationship. Therefore, what to look for when going for the puts in the US dollar Canadian dollar is the following. If you remember, we recommended calls on it based on the based on the direct relationship between the market geometry there. If you remember, we analyzed the two irregular flats there, and we said that based on the retracement level here, we are looking for something like ABC X and then another ABC. Well, this implied that the C wave here to the upside that started here with these lows in the 10414 should be a five-way structure or should be an impulsive move. Now, a five-way structure or an impulsive move needs to have at least one wave to be extended, and there you go, we are looking for a third wave to be extended. However, this third wave to be extended, it doesn't seem to be this one here, because if you take a Fibonacci retracement and try to see for the 161.8 applied to this wave here, so 161.8 right to this maximum highs and lows, and apply the 161.8, so from here to here, and you take the result and you put it here on the potential third wave, you are seeing that actually it is bigger than the third wave. It implies that the third wave is not extended. So that is not what we are looking for in terms of the extension. So if this is not the third wave, then the only possible way for that to be a third wave is the following. This to be the first wave here, then the second wave, of course, to the downside in these lows here. And then if you take a trend line from the beginning of the move and connect the 0 point to the second wave like this, now this trend line should hold as long as the impulsive move continues, and ideally should not be broken by any part of the first or the third wave. So 1, 2, looking for a third wave. Most likely the third wave is the one that we are seeing here. Probably not done yet. Why? Again, because of the extension. If you take a Fibonacci retracement from the lows here and into the highs here, and you look for 161.8, and you compare it with the whole length of the previous third wave, you are seeing that it fits into the third wave, and that makes a five-way structure. 1, 2, 3, 4, 5. A five-way structure of a lower degree. So if you go and identify the lower degree structure, so this would be the first wave, and this to be the second one, a third wave to the upside, 1, 2, 3, and now we are looking for a fourth wave. Now this fourth wave is most likely not done, or if it is done here, the extension might be already in place, but I would suspect there is something like A, B, C, D, E, and then price to try for another high. Anyways, for the sake of our analysis here, it doesn't really matter. Let's assume that this is a fourth wave, and let's assume that this one here is a fifth wave. So 1, 2, 3, 4, 5. And then of course this would imply that the move to the upside is actually the third wave, blue, of a bigger degree. And then we are looking for a retracement level. Then we are looking for a retracement level as a fourth wave, as most likely to be this one here. And then, of course, a retracement level, and then for price to attempt to make a new high. So what I would do now is the following. If this is the third wave, and we establish that this third wave here, either done here or done here, it doesn't really matter. So the third wave here. So if this is the third wave to the upside, then we are looking for a possible fourth wave here. And whenever the third wave is extended, then there is a strong relationship between the first and the third wave to tend towards equality. So there you go, measuring the length of the first wave, applying the outcome to the end of the fourth wave. The fourth wave is to come, okay? It is not here yet. So applying it by the time the fourth wave ends, something like this, let's say, and that would be the logical place, and then will be the logical place to engage into buying puts. And I will go with end of day or even 1 week expiration date for it. So we are looking for a fifth wave. I would say it is something like 106.17. I will go 106. The highs here were, let's see, 105.83. I would go 106 because we don't know the retracement level for the fourth wave. So in order not to miss that one, or maybe if you don't want to enter directly at the market, wait until price reaches 106 and then engage into buying the puts. Anyways, after 106 comes, the impulsive move will be most likely done. The whole ABCX is most likely done, and therefore buying puts, buying put options with end of week expiration date after 1.06 comes is our strategy, and this is the plan for trading binary options based on the US dollar, Canadian dollar, and the extensions and the rules applied to this impulsive move on the 4-hour chart. Thank you very much for being here. This is fairbinaryoptions.com, and let's wait for the 106 to come before engaging into buy put options, as this move should head to the downside. Keep in mind that all these analyses and recommendations are possible due to the help of our general sponsor, Lioneye.